Gold just had its worst day in months. Down 4.4%, $188 ripped out of the market in a single session. Price sliced through the 200-day moving average like it wasn't even there. But here is the trap that will separate the winners from the losers this week. That same freefall has crushed the RSI on the daily chart to 24. That is a level that has marked virtually every major swing low in the last 12 months. The crowd is now convinced we are heading straight to 3,900. And that conviction is exactly why we are about to see one of two things: a violent stop hunt that traps late shorts, or a genuine continuation that punishes early bottom pickers. There is one danger zone and one hidden opportunity right now. I'll show you both. Stay to the end. I'm giving you 3 exact levels you can trade tomorrow. Write this number down right now. 4,268. That is today's pivot point. It is the line that separates a dead cat bounce from a full-blown structural reset. If gold manages to produce a 4-hour candle close above 4,268, the entire bearish framework that has dominated this week flips. The short squeeze triggers, and we could melt up toward 4,317 and beyond in days. Below 4,268, sellers remain in absolute control, and every bounce is a shorting opportunity until proven otherwise. The session bias is aggressively bearish across every single time frame. Weekly strong sell. Daily strong sell. 5-hour strong sell. 1-hour strong sell. But we are fading, not blindly trend. Following, because the momentum is so stretched that the next $50 to $80 will be a trap for one side. Here is where the herd is positioned. Speculative net shorts on COMEX have surged to the highest in 3 weeks. ETF outflows from GLD yesterday were the largest one-day redemption since the banking stress of 2023. The herd is loaded short, expecting a clean move to 4,000. When everyone is on one side of the boat tips. That does not mean we fight the trend. It means we structure trades so that we are selling strength, not panic-chasing weakness. The micro insight is this: the average true range is $107. Gold can move $107 in a day easily. If you sell the current price at 4,071, you are selling after a $188 drop with only $60 to the next major support at 4,028. That is a terrible risk-reward for a fresh short. The playbook is patience. Let price come to you. Let's pull up the weekly chart. The 200-week moving average is sitting just above the 4,000 handle, near 3,990. That is the ultimate brick wall. For the last 5 years, every single test of the 200-week MA has resulted in a violent rejection or a major accumulation zone. Gold has not traded below that line for any sustained period since the pandemic era breakout. This sell-off is now bringing us toward that magnetic level. On the daily chart, price is buried below every major moving average. The 200-day MA at 4,377 was lost decisively and now acts as resistance miles above. The 100-day MA at 4,582 and the 50-day at 4,578 have rolled over. A textbook death cross pattern is forming. The 20-day MA at 4,423 is the nearest daily moving average, but it's over $350 away. That tells you how extreme this dislocation is. Now drill down to the 4-hour chart. The 20-period moving average on the 4H is at 4,125 and falling fast. That is your dynamic resistance, your sell zone ceiling for any bounce. The 200-period MA on the 4H is around 4,320, which aligns perfectly with the R1 pivot at 4,317. That is the macro shorting zone if we get a deep oversold snap. Now the 60-minute chart shows the 200-period MA near 4,190, another layer of overhead resistance. So resistance is stacked: 4,125, 4,190, 4,268 pivot, then 4,317. Support is thinning. S2 at 4,123 has already been breached intraday. The next big floor is S3 at 4,028, followed by the psychological 4000 and the 200-week MA at 3,990. Here's what most traders miss. Pull up your MACD. The daily MACD histogram is deep in negative territory at -106. No divergence there, just raw bearish momentum. But on the 4-hour chart, as price makes fresh lows, the MACD histogram is starting to print higher lows. This is a classic hidden negative divergence that signals selling momentum is decelerating. It does not mean a bottom is in. It means the next leg lower will need a catalyst, or we could get a sudden short squeeze back to the 20 MA on the 4H. At the same time, the RSI on the 1-hour chart is buried at 24, and there. Williams' percent range is literally at -99. That is as oversold as it gets. The ADX, however, is at 44, roaring. So you have an unstoppable force meeting an immovable object, extreme trend strength colliding with extreme oversold conditions. The resolution typically is a sharp, fast bounce that fails right at that 4,125 or 4,190 zone, and then the trend resumes. That is the setup we will trade. The trap is that retail traders will see the bounce, think it's the bottom, and buy into a wall of selling. We won't. Now the fundamental driver. Yesterday, President Trump threatened more attacks on Iran. Crude oil exploded higher, but gold collapsed. Why? Because the market priced a classic deflationary supply shock scenario. Deeper conflict in the Middle East sends energy prices soaring, which crushes economic growth expectations and sends real yields higher. The 10-year TIPS real yield jumped 15 basis points in a single day. Gold is moving tick for tick inversely to real yields right now. The dollar index surged above 106, adding a second layer of pressure. Gold is not trading as a safe haven. It is trading as a risk asset alongside equities. Look at the cross-asset linkage. The S&P 500 also sold off hard, and Bitcoin dropped in sympathy. That tells you this is a liquidity event, not a pure geopolitical flight. Institutional positioning confirms it. Gold ETF holdings were liquidated at the fastest pace in months. Hedge funds flipped net short on the week. Sentiment readings are at fearful extremes. The 1 to 2 week directional lean is bearish below 4,268, targeting 4,028 and then 3,990. The exact event that invalidates this lean is a daily closeback above 4,268. If that happens, you must abandon all short bias. If Iran de-escalation headlines hit, real yields could collapse, and gold would rip through 4,125 and 4,190 in minutes. Do you think gold will hit 3,980 this week? Comment yes or no right now. I'm tracking consensus. Most people skip this next section. That's exactly where the money is made. Keep watching. I'm about to give you 3 specific trade plans with exact entries, stops, targets, and invalidation levels. And after the second plan, I'm going to ask you to type your gold range for tomorrow in the comments, so stay tuned. Strategy 1. The sniper. This is the conservative, high probability setup. We wait for an oversold bounce to exhaust itself into the 4-hour 20-period moving average at 4,125. The exact trigger is a 1-hour candle close above 4,100 first, showing momentum, followed by a rejection wick and a 15-minute bearish engulfing candle at or near the 4,125 level. That is your sell entry. Stop loss goes at 4,175, above the daily S1 and above the most recent minor swing high. The logic is simple. If price can reclaim 4,175, the bouncer's legs and the short is invalid. Take profit 1 is 4,028, the S3 support, for a risk reward of 1 to 1.94. Take profit 2 is 3,990, right at the 200-week moving average, for a total risk reward of 1 to 2.8. We take partial profits at target 1 and trail the stop to entry. The setup is voided entirely if the 4-hour candle closes above 4,175 before we get the entry signal right now. On your screen, here's the clean trade card for the sniper, conservative, entry, 4,125. 1H close above 4,100, then 15 minutes bearish engulfing at 4,125, stop loss, 4,175 take profit 1, 4,028 take profit 2, 3,990 risk, reward, 1:2.8 invalidation, void if 4H candle closes above 4,175 strategy 2. The active trader. This one is for those who can sit at the screens and manage a counter-trend bounce inside this bearish structure. We are looking for a false break of the 4,028 support. The market knows 4,028 is the line. So watch for a spike below 4,028 that fails. A 5-minute candle that wicks below and closes back above 4,030. That is your trap trigger. Entry is a market buy on that close, with a tight stop at 4,010, just beneath the psychological 4,000 but above the 200-week MA, giving a clean invalidation if the support truly breaks. Take profit 1 is 4,100, capturing the first resistance gap. At that point, immediately move your stop to break even. Take profit 2 is 4,125, where you must exit and potentially reverse. This is a high win rate, mean reversion scalp, but it fights the trend, so sizing must be small. Risk reward on this trade is 1 to 2.8 to target 1, expanding to 1 to 4.7 if target 2 is reached. Invalidation is any 15-minute close below 4,000 with volume. If that happens, you cut immediately the active trader, standard, entry, 4,030, 5-minute false break of 4,028, closes above 4,030, stop loss, 4,010 take profit 1, 4,100 take profit 2, 4,125, trail stop to entry after TP1, risk, reward, 1:4.7R to TP2 invalidation. 15-minute close below 4,000. Now I want you to type your gold price range for tomorrow in the comments. Give me a high and a low. Let's see who's aligned with the institutional flow. Drop it now before you hear the third setup, strategy 3. The aggressor. This is a high-risk momentum chase, only for those who can lose small and manage risk aggressively. The setup is a breakdown continuation trade. We are not waiting for a bounce. We are selling a 1-hour close below 4,028. The moment a 1-hour candle closes at 4,027 or lower, you enter short with a market order. The logic is that a confirmed break of 4,028 opens an air pocket all the way down to 3,980, and the speed of the move will be vicious. Stop loss is placed at 4,055, just above the minor intraday resistance, giving a very tight $28 risk. Take profit 1 is 3,980, right at the 200-week MA. That's a risk reward of 1 to 1.7. Take profit 2 is 3,920, the next structural support, stretching the reward to 1 to 3.8. This trade is explosive and can work within hours, or stop you out in minutes. I only recommend this if you are already profitable today and can afford a quick small loss. Invalidation is a 30-minute candle close back above 4,040 after entry. That signals a failed breakdown and a likely trapped the aggressor, high risk, entry, 4,027, 1H close below 4,028, stop loss, 4,055 take profit 1, 3,980 take profit 2, 3,920 risk, air reward, 1:3.8R to TP2 invalidation. 30-minute close above 4,040 risk management pulse. Never risk more than 1 to 2% of your account on any single trade. No positions through high-impact news events like US PPI or sudden Iran headlines. Stops are non-negotiable. This is how you survive to trade the next big move, and the next, and the next. Here is the only level that matters for the next 24 hours. 4,028. If gold holds above 4,028 on a daily closing basis, the panic will have been absorbed, and a recovery toward 4,268 becomes the base case. If we close below 4,028, the freefall toward the 200-week moving average at 3,990 is virtually guaranteed. Tomorrow's wildcard is US PPI data and any Iran ceasefire rumors. If real yields drop suddenly, gold will squeeze without mercy. If yields keep climbing, 3,980 is printed. I will be here, same time, breaking down exactly what happened and what comes next. If you want the full breakdown on Bitcoin and the S&P divergence, that video is live now. Tap the end screen. Smash like if this gave you a clear plan. Subscribe, hit the bell, and I'll see you in the next one.